Traders, before you place that your next trade, I need you to watch this particular video. I call this the triangle of success. The triangles that allow you to become a profitable traders. Immediately you understand the secret behind the market. And today we'll be dealing with this particular triangle. We're not taking too much of our time, traders. If you see what I have on my chart, here we have this particular triangle, and at the center of this particular triangle, you can see we have the dollar sign. So that means that at least everybody wants to make money in dollars, right? Now, for you to make money in dollars, you need these three cardinal points for you to become a successful trader. So the first thing everybody is looking for as a trader is strategy. That is what the first S stands for, strategy. And I can tell you that strategy is everywhere, because if you come to YouTube today, you have all sorts of kind of strategy in the market. Somebody is telling you the strategy just making $1 million, this strategy just making me $100,000. That is true. But if you pick up the strategy and consume it, can you be able to also make that same money? So that means without not even have a strategy, you can also make profit. Why? Place 10 different trades. 10 different trades. You notice that at the end of the point, some will go in your favor, some will go against you. So that means if you don't even know how to trade, you can still make money in the market, right? But can you be consistent in making that profit? That is where the real deal is. Now, for me, I feel like strategy alone is not enough. So for you to maintain that profitability system consistently, you need what I call a proper risk management and a risk reward ratio. Now, you can have a very good strategy, and your strategy is giving you average of ratio 1 to 1. So that means if you're trying to risk 1%, you also want to make 1%. So that means if you take the first three trades and you're negative, if you now take the fourth one that give you profits, you just make 1%, you are still negative about 2% of your capital. So in respect to that, you must have a very good risk reward ratio. And what I always teach my community is don't risk more than 1% of your capital, and also target average of 3% of your capital for beginners. Because by the time you build your confidence in the market, then you cannot start thinking of swing trading, cannot start talking of ratio 1 to 5, ratio 1 to 10. So now you have a risk management that teaches you to risk just 1% per trade. If you check here, I have risk management plus risk reward ratio. These two things will definitely help you to scale up easily, because if you risk 1 to make 3, you can take average of 4 trades and you're losing the 4, and one just come in your favor, almost back to break even. And for me to explain this particular concept, let me quickly share with us this particular table here. Now, whenever you are trading as a trader, once you place your trade, the worst that can happen is either you make profits or you're negative. So this is it. So each time you lose in your in any setup you take, you are losing just 1%. And whenever market goes in your favor, we are targeting average of 3%. So now let's look at it here. Here we are taking average of 10 trades. So let's measure the respect to 10 trades. So you pick your first trade, you lost 1%. You pick the second trade, you are negative under 1%. You pick the third trade, negative 1%. Because of that, you refine your strategy, you pick your fourth trade, you got to know that you now have a profit of 3%. Now, if you check it, you are taking average of 4 trades, right? You lost 3, and 1 has covered for your losses. So let's assume you pick the fifth trade, and you notice that you are also negative. You're also in negative of 1% in your fifth trade. And you pick your sixth trade, you got yourself under 3%. Maybe you pick the other one. This market, you have to be real. Maybe you are in a break even. There's something we call break even. Yeah. So that means your break even, you don't lose. Your break even, you don't win. At least you got capital is saved. And you pick this other one. There's another negative. So here you have 1, 2, 3, 4, 5. You have 5 losses already, and you have 3 wins. As at this time, if you check it out, you are still in profit. So you pick your night trade now, then you have a profit of under 3%. So you have 1, 2, 3, 4. which is giving you profit. Then you pick your last trade, you're negative of 1%. So let's look at it from this angle. 1, 2, 3, 4, 5, 6. You lost 6 trades out of 10 trades. And you got to know that 3 goes in your favor that give you ratio 1 to 3. 1 give you break even. You just have to be real as a trader. You don't need to hype it too much because it happens, right? So by the time you had it up here, you have a negative of 6%. And here, by the time we had it up 1, 2, 3, we're having 9 here. So you have profit of 9% in profit. If you subtract this 6 from 9, guys, we are still in profit of what? Of 3% of our capital. Despite the fact that just 3 give us our TP. This is reality. This is how the market really works. If you can follow this simple illustration I've given to you, and taking away the hyping or taking away the social media winnings we are all seeing, it will reduce the stress you are putting on yourself. So if you can follow this, it will reduce the noise and helps you to even build confidence over the time as a trader. So having explained this, I want you guys to please follow up with this, try to refine yourself, and that takes us to the third point on our triangle. I always like to call this third point the vitamin D factors. Yes, the vitamin D factors. Why do I call it vitamin D? Now, you have 3 angles you are looking at. The first one, as I explained, strategy. We have risk management and risk reward ratio. The third one is what I call discipline. Irrespective of any industry you find yourself today, you must have a level of discipline of how you manage yourself. I will always advise that the financial market is a rule-based system. You must create one for yourself and you must learn how to follow it. Based on the analysis I gave to us now, I said don't risk more than 1% of your capital. And whenever you are targeting, for beginners, try to target average of 3%. That is a rule you've set for yourself. So imagine you are trading, maybe you pick your first trade, you are in negative of 1. You pick second trade, you're another negative of 1. The next thing, you're now seeing a setup that looks like your A-level setup. Now, looking at your A setup, who told you, or you are not the one, you don't control the market. So how do you know that this your A setup is going to give you profits? Then you now decided to go and risk like 3% of your capital. So that means you've increased your risk. So that means if you now lose that third one, you're already negative of 5% of your capital. So for you to recover with your ratio 1 to 3, it will take you average of more trades, and that can even lead you to being disturbed, worried, frustrated, because we all know how the market really works. So I will always advise, learn to create a kind of rule-based system for yourself while you are trading. So discipline, your psychology really matters, because if you lose more than what you are ready to let go in the market, you start struggling with the market. You start looking for, or you start jumping from one strategy to the other. So as a trader, the best thing you can do is to make sure that you've created a very good discipline that can help your psychology to be stable while trading. And this is the best advice I can give to set of traders who are still trying to find themselves in the market. So all what you just have to do today is for you to watch the video and check up yourself. How have I been trading? Have I been jumping from one strategy to the other? Did I really have a risk management? And something about risk management which I always advise is you determine what you are ready to lose in the market. You can choose that you want to risk 1%. You can choose that you even want to risk as high as 10%. Then make sure you accept that risk before you take it. If you don't accept it, you are not, stop calling yourself a risk manager. Because if you accept it, by the time you make that losses, you won't break your laptop or you won't feel sad that you're losing. And I always say that losses in the market and profit is the same thing. The major difference is just the time it's going to happen. When you learn how to have a very good risk management and you follow it up, at the long run, you end up being a profitable trader. These are the things that is not being said on the social media that we jump on. But if you can take out that noise and focus on what works for you, for yourself, then being profitable is just here. All right, guys, I remember my humble self. Banks, please, if you have not subscribed to this particular channel, please do so that I can have access to more information like this. Peace.